Hey folks, welcome back to the channel. We had an absolute god candle on Bitcoin, went much higher. What does it mean for the intermediate and short term, and what kind of trades can we still take? That and more in today's video. If you like the content, please do me a favor, like, subscribe, click the bell, click, and also if you don't miss anything, leave me a comment, share this video with your friends if you think this is useful. Also feel free to follow me on Twitter and Instagram, both those links you find in the description. Without further ado, let's start diving in. And I first actually want to recap on the trades of yesterday, because guess what? None of them got hit. I gave you 4 long setups. One was from here, one was from here, one was from this support level, and one was an aggressive one to the golden pocket. Well, guess what? None of them got hit. Matter of fact, if I zoom in, and this is just full and complete transparency, we're here on a BTC 15 minute. I got into a long trade around here, and or actually a little bit lower, and then we just moved higher for BTC. I moved my stop loss right around here, and then we went higher, and then we came down, and guess what? My long trade got stopped out, and then the price moved without me, and then we just marched higher, and within a couple of hours we had that mega candle to the upside. BTC pumped more than 10%, so huge bummer. The reason why I was a little bit more aggressive on my stop loss and I didn't take any profit yet was because I saw some bearish signs. It looked like the money flow was coming down on the 1 hour. We also had some bearish divergences. I saw that the RSI was getting pretty much overbought, so I thought, you know what, I just don't want to take any loss since it already went up so much. Don't be too greedy. This is exactly, by the way, what I meant with the money flow. And then I thought, you know what, it's fine. I will just move the stop loss, and then I got stopped out, could cover the fees, very tiny profit. But of course, if I would have held the trade of just let the stop loss be at entry or just underneath this wick, how I had initially, then I would have made a bag of money. But hey, it is what it is. So just full transparency there, and now first we're going to clean up the chart, because it has no use anymore to look at these long trades. We are now in much higher regions, and I just want to look at where we are right now and what can we expect, because if you have paid attention, yesterday we talked about the yearly highs, and now we have breached them. I also, the title of yesterday's video was also hunting for the yearly highs. I did not expect that we would take it out within 24 hours. And you also of course have these 2 short trades. I can also take these out, completely irrelevant anymore. So this is now BTC on the daily. By the way, important to notice is that when we went up, and I cannot get tired enough of repeating this, then the open interest was approximately 450 million. Yesterday I already said we came off way above 500 million. That is way too high. I think we are going to get lower. Then we were around 450. I said is nice, but we can go lower. 450 is my minimum. Around 400 would be nice. Look at this. When we had this mega candle to the upside, we went from 456 all the way down to the low 400 million. Perfect. This is exactly what I wanted to see. So when we're just looking at open interest, this actually looks good. And now you can also see that open interest is coming up a little bit again, and also price. What does that mean? Well, that means that this move here to the upside is fueled by new long positions, new participants getting into the market. If you're super bullish, then this is what you want to see. You don't want to see this big candle to the downside where millions and millions of shorts getting liquidated, because that's what it is. There were a lot of short trades still from the yearly highs. So that was here, and a lot of people put their stop loss above these highs, and eventually we break it, and all of these trades are getting liquidated. And well, that then triggers a massive buy, and then you see prices just spiking up to the upside. And this is also what you call a short squeeze, and therefore we just took it out. So far we're staying around this level, so that on the bull side looks pretty good. And yeah, well, I had 2 levels. The first one was the yearly high, and the second one was this high of this cluster right here. And I also said yesterday, if we can close a few consecutive days, so let's say 2 or 3 days above this level, I think we're going much higher. I cannot be a perma bear if I see price going up. Then I think actually we're going towards 38, 39,000, maybe 40,000, because there is just nothing here. Look at this. If you see this whole price action right here, there's just nothing going on there. Matter of fact, if I quickly zoom out to the weekly, this is actually pretty interesting to look at, because nothing happens without a reason, of course. And that is that if we are taking a Fibonacci retracement from this top to this bottom, look at that, exactly into the golden pocket, and that's where we got the retracement. Very, very, very nice. If I then quickly zoom back into the daily, there's something else that I want to show you. We have two major volume profiles from the previous bull market. So where we can see, hey, where do we have the most traded volume? This is the macro one. Whoops, let me quickly change this to non-extent, because if else we're seeing too much data. And then we're seeing that here actually it looks like we're getting acceptance within that area. So the price is right now shy of 35,000 and the value area low here is 31. Principle would say that you then at least go to the point of control, maybe even the value area high. That would mean 46, 47,000. That's still quite far away, but even the point of control would already be 39,000, just the number that I mentioned earlier. And if you would take this area right here, so this whole trading range or this cluster, then you can also see that that is now kind of lining up with that value area low and the point of control of this area. So around that 38, 39,000, a lot is lining up. Long story short, would I long here? Hell no. Hell no. Because yes, it looks super bullish, and I have to say that these pumps, the market structure, the way that there is just no break and everything just goes higher and higher and higher, and there's not a good level to get into. It screams bull market, I know, but that is usually also where the market may try and trick you. This is the RSI, and the 4 hourly RSI is above 90. Look at the number that you see here left on my screen. It is above 90. That is extremely overbought. If we're looking at the daily, then the RSI is 87, almost 88. Also here, extremely overbought. So then you would say, hey, but Ray, didn't you just say that we're seeing new position getting into the market? Yes, this is always people who want to FOMO in. They see the pump, they see it on their phone, on the screens or whatever, and they're like, oh, I missed it, oh, I should quickly need to go in, and then they're just dumping the money into the market, and it's like, oh, just let it ride for a bit, let's just wait for a bit, it will go up. And I think that this is not the start of a new bull run, but eventually this is going to correct. Could be today, could be tomorrow, could be the day after, and then eventually you can get a pretty hard move to the downside. So I would be very careful. You can also see here that now finally in the 4 hour it looks like we're printing a red dot, but look at the money flow. OMG. If I'm just look at this based on the money flow and the way this is setting up, really that curvature, that rounding up to the top, I think we can go higher. I'm not saying that will happen today. Maybe you first need to zigzag a little bit, cool off a little bit, go down and then go higher. That will be super nice. But I think that this is absolutely not done yet, and I think we can see much higher prices. So with that being said, let's zoom in on the 15 minute, because that's the only thing that is important right now. Where are we right now and what can we expect? As you can see, I will keep both these levels on. So that was till so far the yearly high, till we of course then broke it. But this could be a support level, and we have this the other significant high from that trading range all the way to the left that I showed you. So that can both act as support. Of course, let's address the elephant in the room. Then we have our low, so that's this level, that's kind of coinciding, and then we have a high. What would I be trading if we can get it? There will be two longs, one from the low here to the high, and then, oh sorry, that's the other way around. Should do it like this, from the high to the low, and then we have a golden pocket that we actually already just tapped, or just went underneath, so that's actually not the prettiest. Whoop, like this. Well, actually on Bybit Perpetual, this low was this golden pocket here was already tapped once, and then we went higher. But I would actually still play this trade. So if I see this one more time, maybe during the New York Open, and price does something like this, I will try to long it. And honestly, then I actually would be aiming first for these highs, but then eventually actually also this high. So this would just be a TP for me, take profit, and this is then the other take profit. But of course you can see there is just no market structure here, and this could still be quite the move to the upside, 8, 9, 10%, depending on where we are going to end up. What you don't want to see if you are bullish, you do not want to see that we are losing this low, going lower, and S&P it, something like this. That's completely fine. Taking the liquidity, stay here for a little bit, and eventually go higher. Fine. Put your stop loss underneath here and you enter the long right here at this level. But be careful, because if this eventually does one of these that we have also already seen in the past, and eventually just then it just dies out, this can be very dangerous. Don't long any of this, because eventually this can just go much lower, and then I know you're looking back, you're thinking, oh man, I wish I would have short here or here or here or here or here or here, and eventually it just bleeds out. Again, this was the whole rise. I was on a decrease of open interest. Positions closing. No new bull market. Not anything about ETF or institutions buying or I don't know what. Is positions closing. In the bull market, you see higher open interest, way above a couple of billion, and now we only at quote unquote only 400 million. So with the bull market, you really see the FOMO and people getting in, and institutions, and your neighbor talking about it, and yada yada yada. Then you see price going higher. So although the market structure looks bullish AF, really something that we have seen that we only see during the bull market, we need to keep in mind that what is this based on? It is on positions closing. So I would be very careful with longing. So we have two long opportunities. Let me just recap that real quick. We have then the long here from the golden pocket, 78.6. Actually, you need to put your stop loss underneath this low. TP1, but eventually target all the way up. So this is then a pretty nice one. This one, like I said, you need to see a quick buyback. So we can't dip underneath, but I want to see a very quick buyback. And then with quick, I mean quick, like 5 minutes or maybe even less. And then we need to be above that level again. If else, I will not enter the trade, but this could give a major risk to reward. And then actually for the shorts, there is only one I would be willing to take, but this needs to go with confirmation, because you're shorting against the trend. That is taking out this high, right away losing it. So SFP. So actually where we had on this trade that we said drop down and then quick buyback and then go higher, this is your SFP trade, swing fill pattern. Get in here, stop loss underneath here. You want to see the exact same, but then opposite on the top here, that you go higher, lose the level right away, take out this high, put your stop loss above this, and then just trail it to the downside, and then you can just take your profits as we are going down. But on the macro for this week and probably for the week after, if we're just looking at the 4 hourly and the daily, yes, there could be a red day or a couple of red 4 hourly candles, but it just looks super bullish. Also here, I mean, look at this market Cipher B, it is absolutely insane. So you need to be a little bit more aggressive maybe on your longs. Make sure that you move your stop loss right away to entry or in profit once you can. But as you can see also in the last 2-3 days, you just barely get a good chance to enter here on in a long, because it just keeps on pumping and pumping. I wouldn't long here, like I said, because the RSI is screaming overbought. The same here goes for market Cipher B, so maybe this just needs a little bit of time, but eventually I think we can get at least another push up here back to the highs, and that will then also be my first target for the longs. Alright guys, I hope this was useful. You just have to trade what the market is giving you, and you know what, I was actually really hoping that we would go lower, that we make something like a big head and shoulders pattern, something that we have talked about, and yeah, sometimes you can make all kinds of nice plans. If it doesn't work out, it doesn't work out, and if the market wants something else, it's completely fine. You wake up the next day, you make a new plan, and then you just trade your plan, and that's pretty much it. All you can do. So yeah, I already had a few pencil necks in the chat saying, oh, you were wrong again, blah blah. Hey, guess what? I'm making 4, 5, 6 trading plans during the day. Hope that one works out. That's then the one that I trade, and that is then eventually the profit that I'm taking home. And it's fine. I don't always need to be right. You cannot always be right, so just make sure that you have a plan for the upside, plan for the downside, whatever plays out. That's the trade that you're taking. Risk management, stop loss in play and in place, and then just take profit accordingly, and eventually you move the stop loss, and that's how you play the game. Alright guys, that's really it then for today. Hope this was useful. Thank you so much for your patience, for your time, and always tuning in. I really appreciate it. Make sure that you like and subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think this is useful, and of course also feel free to follow me on Twitter and Instagram. Both of those links you'll find in the description. See you guys very soon again in the next one. Bye bye.